So in this video, I will be providing a review of the Temecula real estate market ending the second quarter of 2021. Hi, this is Tom Olszewski with Coldwell Banker and Team Olszewski. Here is the second quarter of 2021 Temecula real estate market update. Wow, we are currently halfway through 2021. I've been creating these market reports quarterly, and if you find them useful, please hit the like and subscribe button below. It helps us out tremendously, and you'll get the next version as well. This is the Temecula real estate market summary. I will also give you some insight on what the experts are saying the 2021 real estate market will be looking like. Is there a shift coming? Experts are saying yes, and I personally don't see this crazy market sustaining long term. So here are the top 5 housing trends here in Riverside County overall. Number 1. The number of available homes to purchase is finally starting to rise. The unprecedented, ultra-low inventory has been the story for over a year now. Yet, finally, now that summer has arrived with all of its normal cyclical distractions, the inventory is on the rise, adding 268 homes, up 11% within the past 4 weeks, and has been steadily climbing since the end of June. It has grown by 630 homes at 30%. This trend will continue throughout the summer months. Number 2, demand. The number of new escrows over the prior month is on the decline after reaching a peak in mid-June. Demand typically peaks between April and mid-May in our area. This year it peaked in the middle of June in Riverside County. Since peaking in June, demand has dropped from 3,976 to 3,643 pending sales, down 8%. So it dropped 137 escrows, or 4%, its second largest drop of the year. This trend should also continue throughout the summer months. Number 3, closed sales are at its highest level since 2005. Through the first 5 months of the year, there were 16,838 closed sales. This pace is the highest since 2005, with demand continuing to outpace prior years. 2021 will be the strongest year for closings since prior to the Great Recession. Number 4, fewer homeowners are opting to list their homes for sale. This trend started last year with the onset of COVID, but dissipated and reversed its course in August last year. When the inventory reached a record low at the start of this year, many homeowners were nervous about selling and worried there would be nothing for them to buy after selling. Combine that with the knowledge that home values were soaring. Many homeowners were just happy to wait on the sidelines while their equity quickly grew. During the first quarter, there were 17% fewer homes that entered the fray compared to the 5-year average from 2015 to 2019. In April, there were 12% fewer for sale signs, 554 fewer. In May, it was 13%, or 590 fewer. In the first 2 weeks of June, it was off by 6%, or 144 fewer. This trend will continue as long as the inventory remains muted and mortgage rates remain at historic lows below 3.5%. Number 5. Pressure is building for mortgage rates to rise, which will impact affordability and demand. During the first week of this year, mortgage rates reached an all-time historic low of 2.65%, according to Freddie Mac's primary mortgage market survey. It reached 3.18% on April 2nd, but reversed course and dropped below 3%. By the third week of April, it has been dancing around 3% ever since, reaching 2.98% on July 2nd. The pressure on the rising rates has been mounting with inflation readings climbing. So let's get to the details for the Temecula real estate market, and let's see how it ended the second quarter. Overall, it remains steady and is still a crazy seller's market. Ending the second quarter, there was only 1.2 months of inventory and homes on average selling in about 6 days if priced right. Even though the number of active listings is lower than a year ago, the total number of sales is slightly higher and is still strong. As I had stated previously, even though it's crazy, it's a better market to buy and sell as affordability is still good. Excuse me, driven by low interest rates at about 3.125%. The lack of inventory with still a lot of buyers looking to take advantage of the low interest rates could mean more money for your home if you sell now before the market shifts and more sellers look to take advantage of the crazy market we are in today. Let's see how the overall Temecula real estate market looked ending up the second quarter of 2021 overall, and take a look at this last quarter year over year. So let's look at what the detailed numbers look like here in Temecula. First, we will look at the closed sales here in Temecula. At the end of June 2021, there were a total of 508 total closed sales in the city of Temecula of all price range and types of homes. This compares to 434 closed sales at the end of June 2020, which is a year-over-year increase of about 17.1%. The number of sales is slightly higher than 2020 numbers, and last year they did not start to pick up until June and actually peaked in July with 530 homes sold. All predictions are indicating 2021 should be a good year for selling and buying, especially if interest rates stay low as they are predicting. Next, we will look at the number of active listings. I'll have a slide on this to show the decrease in listings overall. And as of the end of June, there were 259 active listings in the city of Temecula, which is down from 281 the previous year, decreasing 7.8%. This has been decreasing slightly since May, but still very low. It is important to understand these numbers that even with them being so low, if you want to sell your home for top dollar, it has to look great to get the buyers who are still being picky. We can help with that, and if you go over to our video blog or YouTube channel, I have a video covering what top 5 things you can do to get top dollar when you sell. The next important number we will look at is how many months of supply of listings do we have in Temecula. This, along with the number of sales, indicates what type of market we have today. Where are we in ending up the second quarter of 2021? So are we still in a crazy seller's market, or was there a shift? Well, the data as of the end of June shows just 1.2 months of inventory available for buyers. This is down 25% overall year over year. With the neutral point being 6 months, we are definitely still in this crazy seller's marketplace. If you have questions about your specific neighborhood or home, please give me a call or send me an email, text. I can give you specifics for your area in Temecula and your home. So, are home values still increasing here in Temecula? Well, the median sales price for the end of June in Temecula overall was $670,000. Once again, no need to adjust your speakers. I did say $670,000. This compares to the beginning of 2021, where the median sales price was $579,000. This shows about a 30.1% increase year over year. Again, it is important to know that this combines all types of homes and price points. So during this pandemic, we have learned that maybe our current house may not be working for our needs. Maybe space is cramped, we need to upsize, or maybe we have too much space and it's time to downsize. It's definitely a good time to sell. So just to show how strong the market really is, here are the numbers pertaining to the percentage of sales price to the original list price Homes overall in Temecula sold at 104.8% of the original list price, overall increasing slightly by 4.8%. In general, I'm seeing if a home is in great shape, it's going to sell for a lot over list price and may get many offers, but homes not in such great shape, they're not going to go over as high over list price or get as many offers. So the next number to be aware of is the number of days a home stays on the market before selling. For Temecula at the end of June, that number was just 6 days. This number reflects a 45.5% decrease year over year. What I'm seeing is a home will typically come on the market Thursday and have an accepted offer by Monday or Tuesday at the latest. Here is a summary of the Riverside County real estate market. Active listings inventory added 174 homes in the past 2 weeks, up 7%, and now sits at 2,733, its highest level since January. The summer market has arrived, along with its many distractions. So now that Californians are free to roam the earth again, everyone is eager to enjoy the summer they could not have last year. Demand. A snapshot of the number of new pending sales over the prior month. This decreased from 3,780 to 3,643 in the past couple of weeks, shedding 137 pending sales. This is down 4%. The largest drop so far this year. Demand is at its lowest level since January. Summer has arrived. Many buyers are taking a much needed short break to enjoy the summer they skipped last year. As a result, demand is starting to drop. Expect demand to continue to methodically drop throughout the summer and autumn markets, and then drop at a greater clip during the holidays, beginning typically mid-November. So the expected market time for all of Riverside County in the past 2 weeks increased from 20 to 23 days. Still a red-hot seller's market, which is typically less than 60 days. It was at 34 days last year, much slower than today. For homes priced between $500,000 and $650,000, the expected market time is at 19 days. It's a hot seller's market. This range represents 22% of the active inventory currently and 26% of the demand. For homes priced between $650,000 and $800,000, the expected market time is at 28 days. A hot seller's market. This range represents 15% of the active inventory and 12% of the demand. For homes priced between $800,000 and $1 million, in the past 2 weeks, the expected market time increased from 28 days to 31 days. And for homes priced between $1 and $1.5 billion, the expected market time increased from 39 to 42 days. For homes priced above $1.5 million, the expected market time increased from 82 to 85 days. So looking at the luxury end, this is all homes above $800,000. It accounts for 24% of the inventory and 12% of the demand. Distressed homes, both short sales and foreclosures combined, made up only 0.6% of all listings and 0.5% of the demand. There are only 13 foreclosures and 3 short sales available to purchase today in Riverside County. 16 total distressed homes on the active market, up 4 in the last 2 weeks. Wow. Last year, there were 74 total distressed homes on the market, more than today. There were 3,475 closed residential resales in May, up 71% over May 2020's 2,037 closed sales. May marked an 8% decrease compared to April 2021. The sales to list price ratio was 101.9% for Riverside County. Again, foreclosures accounted for just 0.4% of all closed sales, short sales 0.1%. That means that 99.5% of all sales were good old-fashioned sellers with equity. So I hope this market update has been helpful. And if you've been thinking about buying or selling and you would like more information, please feel free to contact me directly at 951-506-5744 or email at tom@tmolsuski.com. If you would like to receive future market updates, please click the subscribe button below or to the side. There will be a slide at the end of the video on different ways you can contact us. The bottom line, as I see it, is it's still a great time to buy and sell, with still low interest rates making affordability, that's the number one thing, still very low. So I said this before, barring a zombie attack, experts do not see a slowdown or a crash coming. Take advantage of this market if it makes sense for you and your family. This is Tom Olszewski with Team Olszewski and Coldwell Banker signing out. Make it a great day.